So I said pretty much, even though I love this stuff and find it fascinating and agree with it and all that, I'm not really investing in it for the reason I talked about. It doesn't produce cash flow, hard to value, impossible to value, all that stuff. Why? And I talked about this a little bit earlier, but why will I not invest in this stuff? Again, I see it coming. I find it fascinating. I enjoy it personally. I'm not investing in it. Why? For part of the reasons I talked about earlier, the first mover advantage stuff, the greater fool theory, biggest reason is because until this stuff becomes proven, and again, I think blockchain is going to transform the world, for example, but until it becomes proven, until companies, and by that I mean until companies become more profitable, until I can value them on a easier and better basis, I'm not going to invest in them in large scale. If I find an individual investment that I like, then I might. But in kind of general, I won't invest in them for that reason. Because if I can't value them, if they're not profitable, if they're not producing cash flows, that makes them enormously risky. And I am an enormously risk-averse investor. How risk-averse am I? I haven't invested in a new stock in 6 years. Why? Because the valuations have been high and they keep going straight up. I can't find anything to buy. When it comes to stocks, I have found stuff to buy that fits my criteria, but it's been overvalued. And when I was going to buy last year, when the COVID crash happened and the stock market crashed at a rate never seen before in history, I put in buy orders for the first time in about 5-6 years. None of them got filled though in the portfolios I managed because the stock market went up so fast that I couldn't buy. So what does risk have to do with valuation though? You might be thinking. When something has an enormously high valuation, like a lot of the blockchain, like a lot of DeFi, like a lot of the meme stock stuff and the overall stock market right now, it makes it not only riskier because it's more likely to go down from here. It also, and that risk also lowers the amount you should expect to earn owning that investment in the coming years. So let's take the stock market, for example, which is at or near, it's either at or it's at the second highest level ever in stock market valuations. Meaning the risk is super high because the valuations are so high, which lowers the amount you should expect to earn because there will likely be a crash relatively soon. Again, I don't time the market, so I don't know when. And I don't project when because, again, like I said earlier, I suck at it. But when the next crash does come, because the valuation is so high, the bubble's going to pop and stocks are going to fall probably pretty hard. And that's going to lower your return for potentially a long time. For those same reasons, I don't invest in meme stocks, Bitcoin, DeFi, NFTs at this time because the valuations are absurd. In general, the valuations are absurd when you can value stuff. And again, for Bitcoin and this other stuff, you can't value it a lot, in my opinion. Yes, there are ways to value Bitcoin, but they're incredibly convoluted. They're incredibly finicky. I had a friend back at an investment newsletter years ago that I wrote for, and he kind of specializes in this stuff now, Bitcoin and analyzing Bitcoin. And it took him months to figure out kind of an estimated valuation for, I don't know if it was Bitcoin or something else, another cryptocurrency. And I said, when I was just thinking, I was like, I can value a stock, and if I have the information in literally 30 seconds. So that makes no sense to me. If it takes a super smart person that I respect enormously months to come to a kind of a guess at what the valuation was, that doesn't make sense to me. And again, because I don't know what the value is. It could be worth $1 million, could be worth $1 million. Where am I buying at here? Am I buying on the safe range? Am I buying on the overvalued range? I don't know. And that also increases my risk. And I am, again, incredibly risk averse when it comes to any investment. This goes for stocks. This goes for commercial real estate that I'm looking at. This goes for businesses that I'm looking at to buy. I'm incredibly risk averse. Years ago, when I analyzed my stock information, my stock data, for every 1,000 companies I looked at, I ended up buying one stock for every 1,000 companies I looked at. That's how strict my criteria is. Am I saying you should do that? No. not necessarily. That's just what fits my personality, what fits my biases, what fits my perspective, all that. But for those reasons, I don't invest in these things.